Welcome to the Future Ventures podcast. Today's guest is Juho Risku. Juho is a co-founder and a partner at Butterfly Ventures, one of the most active early-stage VCs in the Nordics, focused on deep tech and hardware innovation. He's been building and backing companies for decades, first as a serial entrepreneur, then as an investor involved in over several hundred funding rounds in 100 plus portfolio companies. What makes Juho unique is that he's sat on both sides of the table, both as a founder and as a venture capitalist, giving him a rare perspective on what actually drives successful companies from idea to scale. Welcome, Juho. I'm super excited to talk to you and learn more about you as well as about Butterfly Ventures.
Thanks. It's great to be here.
Why don't we start with just a bit of a trip down memory lane? How did you come to venture? So walk us through kind of like your journey from where you started to where you are now.
I guess depends on how far we kind of want to start, but starting from the kind of a very, very beginning and early stage, like I have always kind of have a little bit of entrepreneurial blood in the family through my parents as well. But very early on, so like mid 80s or something, I got a little bit of money from my grandfather, and I put that all of that money. Actually, not very little. Computers were not super cheap those times, but put all of that money kind of buying computers and started kind of getting into that stuff like mid 80s and bulletin board systems, kind of things before the internet. I was running one of the most popular bulletin board systems in Finland, and then when I got to university, they had an interesting kind of situation, because they also offered a fixed internet connection, a fairly fast fixed internet connection that was quite rare. And then it happened that we started kind of doing an integration of that kind of a traditional bulletin board system and internet with a guy from US that was developing a kind of a software side of things. And that wasn't really a kind of entrepreneur type of thing yet, but a little bit. I got a little bit involved in the demo scene those times as well. Not a programmer, but kind of running the communication side, and my bulletin board system was the kind of official site of one group, and I kind of learned how to do website stuff early 90s. When it was really, really kind of a new, before the Netscape 2s and those. And then summer 96, I was kind of really, really bored at my summer job in an oil refinery. It's really kind of a super boring job. Like you're having a ton of screens waiting for something to happen, and at the same time you are sort of responsible. You need to be awake, and if something explodes or something, you need to be really there. And yet, like anything happening is like every 2 weeks or something. Like you just press a red button, usually everything goes just fine. But nevertheless, I got support, and they allowed people to do kind of stuff that doesn't interfere the kind of thing. And we started a website company in summer 96. Not yet kind of maybe officially. I didn't do lots of projects during that work time, but started kind of diving in. And after the summer job, we started doing a few projects that kind of appeared. Websites were new and fancy, and before the .com bubble, it was kind of a pretty fancy stuff to do those type of things. And that's how I kind of got into entrepreneurship. So essentially, we were doing websites, but pretty quite quickly we ended up doing pretty kind of advanced stuff, like what people would call rich internet applications. These days, like every website these days have these kind of interactions and loading data on the background. And then already somewhere late 90s, we did a system that ran entirely on a process sandbox, had a multi-threaded kernel, and ton of UX stuff, really advanced like windowing system, really advanced UX. That wasn't kind of usual on the browsers at times. And it was really super difficult. Apparently, we were young enough and crazy enough to even try. And that led to a situation where one of my colleagues at the company, one of the other shareholders, kind of invented a few stuff, how to kind of modify on the fly how the kind of a browser operates. And we filed a patent on it, and like several years later, spun out a software company that was focused on that and a couple of other inventions that related kind of how to do better user experience and make the creating user experience without the plugins and more programmable and stuff. And somewhere early 2000s, like maybe 2003 or 4, we got a little bit of angel money year after first VC investment, and those times we kind of started a small operation in Silicon Valley. It was really exciting times, and a good example of how kind of startup world and the timing is everything. I mean, I think we started a little bit too early when the timing was ripe. And then, I have to say that okay, there was like a brief period of time. I remember my US head of sales coming from a meeting of chief information officer of Bank of America, and he kind of was saying that okay, they compared our product and Oracle's, and ours is better. But that lasted like 2 weeks. Lots of money pouring in, and I did a ton of stupid mistakes, on the way, and like maybe a couple of years after, the investors started kind of a feeling that okay, maybe this is not going to a kind of a right direction, and they started figuring out that okay, if they should sell the company. I sold my shares. One of the early investors at the time, I mean, didn't come rich at all, but got enough so that I could kind of go back to school, start figuring out what do I want to do after. And that was like this, I was at that point I was dropped out from process engineering. And then I went back to the kind of uni and started from the kind of leadership and management, and I graduated in a couple of years after as from leadership and management side, and did my thesis from venture capitalist founder entrepreneur relationships and what makes it profitable and agile. That was the kind of that led me. I mean, we had thought about the kind of like this venture studios things already with the first company. Yeah. Little bit. I'm lucky. I think we are lucky that we didn't get money before the .com bubble. I probably would have kind of wasted all of that money easily. But we were being thinking. I had been thinking that kind of stuff already before the thesis. There was one more company. A group of my friends asked me to join in and help them out to kind of figuring out the business model and kind of put together the things around a company that did crowdsourcing or market research information somewhere 2000, maybe 7, 8, 9. That was time when crowdsourcing was a kind of a hot topic, and we again had a pretty advanced system. We were able to kind of run on the browser this kind of a customization that the research results were always custom to that particular user's interest and background. So again, fairly scalable, fairly kind of advanced stuff. But there we had a kind of a really group of founders. But when things got to the point that, okay, now we have an International Mountaineering Federation kind of willing to start providing information 4 different type of gear and a few other things in place, and you know, there were a couple of people that were kind of thinking, I guess, along the lines that okay, now I have to tell my wife that, by the way, honey, you are going to pay the entire home loan, and you know, all the costs of the kiddos, and besides I'm doing the double day compared to my current well-paying job. You know, that sort of didn't gather the kind of a critical mass. And nowadays, that's my own personal sort of company, but you know, that didn't become a big either. But I think I gained a fair amount of experience, and along those times also it happened that there was this program to create accelerators and VC funds. And also kind of Nokia was downsizing a lot in the city where I'm originally from. All used to have a huge Nokia site, and that was the time when Apple started taking market share, and they were kind of laying lots of people. And you know, we basically won a bid to run a small regional fund. To sort of took advantage of the fact that there was lots of kind of a talent coming out at the time. And that was 2012 when we started Butterfly Ventures. So that's the kind of how I really got into the VC. A little bit of luck, a little bit of a kind of a personal interest, and a little bit of a, you know, I don't know, maybe I've been this entrepreneurially minded that dare to grab the opportunity and you know, start doing stuff. But I don't know.
What Juho, what was the hardest part about your becoming an emerging fund manager, raising the first fund? Did all of the money come from Nokia Ventures, kind of like, or did you have to raise the money from different LPs?
It was Nokia Ventures. It was one of the local LPs, and okay. I guess that part wasn't super duper difficult. Because we won the bid, and it was kind of a clear set bidding process. So I don't think that particular part, sort of getting started, was super difficult. Everything before, of course, you know, that you were at the place where you could win a bid, and you know, there were the right people around at the time to win that bid. My co-founders and you know, and everything that had happened before, like being an entrepreneur, I think was a lot more difficult than that particular part. Of course, later, you know, once you kind of go, you know, through fund generations, it becomes a lot harder. Like, you know, well. Of course, if you just kind of would invent it, okay, now I'm starting the VC fund and then started fundraising, I'm sure it would be super difficult. But I'm not sure how many people get to the business that way. Maybe people start investing their own money first. Yep. I did a little bit that in a way, because I got involved on my friend's kind of a company, but it just turned out that they figured that they want to have me as a CEO as well. Originally, I was just trying to help out, and you know, even without any pay. But then I kind of figured, okay, I can invest a little, and you know, they wanted to be on board. So I don't know. I'm this optimistic person in general that it's a little bit hard for me to even recall what was difficult or easy. I think the difficult parts really were early in my entrepreneurial career, where I almost made a bankruptcy. I had to lay off lots of people, and you know, when I had to kind of sell my shares when it was obvious that there's no place in my startup to me anymore. I kind of still kind of had a kind of a place in my heart, and that sort of stuff, I think, has a lot bigger effect on me, that kind of a more emotional side of things.
Yeah.
The rest, like, you know, when you have been close to bankruptcy and sweated through the night, like half a year or so, and done like really super duper long days without the holiday for, you know, year or 2 years, you know, when the times are such, I think quite many things don't feel that difficult afterwards. It just works.
I mean, Juho, this is a moment that many entrepreneurs face, and entrepreneurship is not for the faint of heart. It's for people that have the stamina, the resilience, the grit to persevere through challenges, because the highs are really high and the lows are really low. How do you persevere through this period when the times were tough?
I don't know. I mean, I think it is a little bit of the optimist nature. And a little bit of the fact that we had a really good people around. Like there were people who didn't get salary for months, and yet they were around. And I think all boiled down that we were pretty honest to the employees. What's going on, and it was very, very obvious that the founder team kind of took the hit first. So there was a kind of a very high morale, and I could imagine that people could have switched the company a lot quicker than in most other places. So the people around me, the kind of optimist nature, I don't know, being young and hard-headed. Sort of stuff. But it's not like a single thing, and quite often I think that startups and being an entrepreneur is a little bit like a recipe. There's lots of ingredients, a little bit of even this kind of secret magic that cannot be described in the recipe that makes a company and makes a culture company or a entrepreneur even.
So, I mean, let's just follow the thread about the culture. How do you build a successful culture, and what is a successful culture in your mind?
That's again a hard question, but I have always personally believed that one needs to lead from the front line. So lead by showing an example, and being a kind of a trustworthy and open, all in all, and kind of doing things, not just kind of trying to delegate. And like I basically think that being a CEO is a service profession. It's your job to make sure everybody else can do their job, and that might be that not all the people kind of understand that it's not just kind of a looking from the top and delegating, but also kind of a showing example and building a kind of a culture that people don't drop a ball. And if you don't answer the emails, or you're kind of frequently dropping the ball, how can you expect that anybody below would do anything else?
Yeah, I mean, from our perspective, culture is really what you demonstrate. It's how does the organization or how do the employees behave when no one is watching. It's not about posters on the wall or beliefs, or it's like, what do you actually do when no one is watching? You also so can we just switch gears just for a second and talk a bit about Butterfly Ventures and what like kind of the investment thesis? What do you focus on? You invest in seed, you often invest in companies that they pre-revenue. Like if you had to reverse the lens, what is it that you're looking for in a founder, in a founding team, in a company, in order for you to say, okay, I'm going to write a check to this company?
I mean, I have always been a tech enthusiast and interested to kind of, and I guess I'm slightly unusual VC in a sense that okay, I don't have a very deep engineering background, but I'm really, really interested of how stuff works, how it really works, and what does it mean that what the product is, how it works from the kind of a business point of view. And I have programmed 20 different languages, but I was never a good programmer. But I was kind of okay at that's why I became project manager, kind of a customer-facing person in the kind of first company. In any case, I did programming in the beginning as well, but I think that I have always kind of had a good eye on how things connect together, and for me, it's quite important to understand the product, the technology, how it's differentiated, and then kind of start getting a little bit of perspective on the kind of a business model and stuff. And I think being an early investor, that's actually quite important, because quite often you don't have a set business model yet, or you don't have kind of a matrix or years of numbers that you could kind of see. I mean, of course, you need to look into numbers, unit economics, everything that. But I think that the understanding what's the opportunity here and how it's different to everything else, that at least for me has been quite important. It's not to say that everything else wouldn't be important as well, but I think that little bit kind of lends a baseline also for kind of starting to look, okay, what's possible from the market size point of view. We definitely look a lot the market size, how big of an opportunity it can be. But quite standard from the kind of VC point of view. But I try to kind of build it from the kind of where this technology is coming from and where it's applicable to. And then, of course, I mean, there are things like founder chemistry. I mean, we have a kind of official scorecard even that we use. It's more of a discussion tool, to be honest, to standardize the dimension of the discussion. But pretty usual VC stuff. But as said, at least so far, these funds have oftentimes invested pre-revenue. More often than not, invested pre-revenue, and we've done a ton of cases literally day one after they spun off from the university or so forth. So that's and. For me, it's kind of important. I guess it comes a little bit of we are a relatively small fund, just 50 million vehicle, the latest one. So we can't brute force too much. Like there are these big boy players that have billions under management, and they can kind of take this little bit of a brute force approach and make more. Whereas we maybe need to kind of be a little bit more sensible on, for example, differentiation, how this is differ and better than everything else on the market. It's not that we can kind of brute force like better executing team in place and brute force like bigger marketing budget in place. Even if we are kind of building a decent sized syndicates and investment round necessarily are not that small, but we cannot kind of account on that. Okay, if it flies, we can put yet another 100 million to sort of make it or break it, and the second best will do. So we need to be quite sensitive. Second best with best team will do. We need to be quite sensitive that it's the kind of not just the kind of a best team, but also the best technology and product. And of course, being a bit smaller, it gives a little bit of leeway. Okay, of course, we like if there is a $1 billion market, but we can also take a kind of a smaller niches, which is in the range of hundreds of millions on total addressable market size type of thing. So that will still move a needle for our size fund. And I guess anybody who's kind of below a few hundred million fund size.
No, I mean, all of this makes sense in terms of the areas that you focus on the opportunity in the market size, the founder chemistry, all of this makes sense. Now, out of curiosity, question, I guess it's two questions, not one, but do you primarily invest just in Nordic companies? And then the second one is, because you're, in some cases, you are chasing opportunities that they're smaller, but and the thesis could be that it's really hard to compete with the larger funds that have a lot of capital that are chasing the bigger opportunities. what is the most common liquidity event or exit for your portfolio companies? Do they sell to strategic? Do they exit? Do they sell the companies? Do they go public? Like what's the most common scenario? Or is it like a subsequent VC comes in and just kind of buys you out?
We have had a bunch of this kind of pre-list IPOs and then like, I don't know, 15 some M&A cases. And I have to say that the best exits have been the M&A based, that kind of someone big bought the company for one reason or another. I mean, I don't want to say that we are kind of focusing on a smaller kind of opportunities per se. It's just that we need to put emphasis. It's not just that the size and execution capacity is enough, and we have a little bit more leeway in terms of size. But of course, we are still aiming at those kind of big wins. Any VC fund that does well needs to have at least one of these kind of outsized 20, 50, 80 times money back. That's, and it's interesting. Sometimes I just had a chat maybe a year and a half ago with the LP that has invested nearly 100 funds since 80s, and it's funny that even in their portfolio, the funds that perform, it's like 4 funds brought in 80% of the kind of the money above the 1x. Let's put it this way. And there were 4 underlying assets, or essentially 4 underlying assets on those. So one per fund. Yeah. And it's quite strange that is even in the fund of funds side. It might be working that way, but it's quite, this power law is quite strong in particular what comes to this kind of a tech VC type of game. So definitely the kind of a size from that perspective matters.
So let me then ask you a question around. I guess it's a multifaceted question, but the typical fund performance is if you have 10, if a fund invests in 10 companies, 2 fail, 6 are steady eddies, and 2 drive the outsized returns. How has AI shaped how you invest or how you monitor, how you evaluate decisions, but also like what does your tech stack looks like in terms of evaluating where to put money, evaluating the decision that you've made as to how the company is performing, and then looking back to develop kind of a pattern recognition? Like, what does it look like?
From very early on, we have had this kind of a fairly systematic system where we kind of score all of the companies before the investment, right after investment, and then every quarter, and always same dimensions, and that kind of gives a discussion framework. So that's we've been doing since 2013 or 14 or something. And I mean, we use AI these days, but I think it's really about the system that we've tried to build a kind of a game plan that sort of automatically puts the better cases on top. So in a sense, I'm not trying to figure out, if this particular one case is, every dimension and full depth, good or bad. I'm trying to figure out whether it's a top 3 case or not, or top 5 case or not. And it's more important to get the kind of order right than any given time than get exactly whether the market size is 2.456 billion or 2.1 billion, for example. And these kind of scales matter. And that kind of a process approach and systematic process approach that we have a certain process steps that the companies always go through, and we have always a kind of a discussion frame of reference that kind of standardize the discussion, as well as points out, like everybody gives a score, so we can immediately identify if there is a divergence in opinions and discuss, because usually that means that there is something in between the lines that different us partners see differently, and that way it's and again it's a system that allows us to kind of discuss the more relevant stuff, and that's what we've been kind of driving. AI has been more on the sort of that we validate against, okay, did our thinking matter, or did we get it right? Is there any kind of gaps in the thinking? Of course, there's a ton of tools that we use, like and then they run the day-to-day operation, like CRM side, not so much on sort of making decisions, but gathering information and organizing information. That's what we've been kind of using AI more. I mean, personally, as an entrepreneur, a little bit, I wouldn't like to be in a fighting against some kind of AI shield. I have always felt that we need to be pretty open to the startups and who they are, and quite often particularly these early startups don't know how to explain their stuff very well. So, and at the same time they are doing stuff that doesn't exist yet anywhere else. Yeah. So, and these type of more unique, more creative things, AI tends to do lots of kind of mistakes, and you really need to know how to ask, or you need to have tools that kind of structure, make it structural. How do you kind of ask in a way that the fact that these are early and they do stuff that doesn't exist.
Juho, on the doesn't exist part, where do you get the data set to evaluate opportunities? Because I mean, if it's nascent technology and they invent it, obviously you said you're not deeply technical, but you're technical enough to be able to evaluate how this fits within a business environment. But where do you get information, or how do you go about building out a data set to help you make a decision? You talked about market size, you talked about opportunity size, like what other data points do you ingest in terms of building, like, okay, this is like top 1, top 2, top 3, or like this is how they fit on a market map vis-a-vis other competitors, or if it's a nascent technology, what other technology exists to complement or substitute?
Well, first of all, we source our deals. I didn't answer earlier, but at the moment, different Nordic and Baltic countries, and mainly different universities of those countries. So over 75% of the deal flow comes from those universities. So typically, the science part is solid. It's more like getting that into a context and understanding what's the opportunity there. I don't know. I mean, I guess that's the part of the VC that I've been meeting one-on-one meetings. This 1 hour one-on-one meetings now. How many years? Since 2012. 300-400 a year. Yeah. So you typically of any given type of company, you've seen at least 5 to 10 others that are kind of tackling the same problem, a little bit from a different angle, or with a little bit different kind of a product or value proposition, or market entry logic. And quite often things happen, like my second startup was at the time when everybody started kind of pouring in money, and there were certain kind of factors in the market that sort of aligned the stars, so to say, that things start happening. And quite often, usually that there are the market is sort of ripe for a certain thing.
Yeah.
And that's the reason why oftentimes it's not that you have to kind of discuss just one with the one founder of about a certain problem, but you get the view from the several different angles. And good at being VC is that actually people are quite eager to explain and help me understand. I mean, certainly I understand. I don't understand a ton of stuff that the people do, but typically there is a interest of sort of trying to help me in understanding. So that's the kind of a good spot to be. I mean, I don't know, and you kind of develop a view. Like, I mean, when we started doing websites, I'm sure we wouldn't have started doing a product that helps making difficult websites if we wouldn't have been doing difficult websites. And that wasn't the kind of a short story. Like, it took like 8 years to get to the point that the company got founded. So there's this kind of and I think people oftentimes don't value enough the background. And actually, I think that quite often the case is that startup doesn't emerge like, okay, in this odd Sunday last week, I thought about this and, let's start a startup. But usually there is a kind of a longer story and a bigger background that how people discovered that this is a problem.
Yeah, for sure. And I mean, those are the best ideas. They've been percolating in the background, and the founder has been working on it, and they might have been hoping that somebody else comes to the scene and solves the problem. And then when they see that nobody's emerging, they're like, okay, well, let me tackle this problem because it is a problem that I'm facing. What are some red flags for you that you would say, like this is a no-go territory for me, that I'm going to pass on this as an investment?
Well, of course, if it's a off focus case for us, like there's no kind of a deep tech or the technology stack is.
Yeah.
That's partially because we need to rely on that tech stack because we cannot kind of generally brute force things. Team dynamics, if there are kind of I don't think we ever invested a single founder. We have a founder to find another founder. That happens. And quite often we have helped a technical team to find a commercial founder before the investment. That happens quite frequently. But single founders, we don't invest. And also, if somehow there is not a kind of a feel of a positive team dynamics within the team, that's definitely a red flag. We don't do class 3 medical devices or drugs. I don't know. Generally, I'm quite open-minded. We are kind of industry agnostic. We are technology agnostic, it's more about the kind of a stage, being within the kind of a sandbox that is ours. Like, it doesn't make sense for us to invest a company in, let's say, in Italy because we don't have anybody in Italy, so that we could be confident that we are kind of have kind of unfair advantage sourcing deals from Italy.
Yeah.
I mean, we might, 1 or 2 funds down the line, if, we figure out the way to the deal flow and probably have a person on the ground. Probably we are kind of expanding the scope on Netherlands with the next fund and the kind of a nearby areas. There's been a person 1.5 years kind of building the base for the sourcing operation there already. So that seems likely, but if it's within our sandbox, usually we are more than happy to kind of listen to the story, and then it's about the kind of getting to figuring out whether it's top 3 case or not. Yeah.
Juho, you mentioned that one of the red flags for you is if it's one founder rather than a team of co-founders, maybe 2 or 3. Typically, if the idea is coming out of university, I'm assuming that the primary co-founder is somebody that's very deeply technical. And you said you will help them find a co-founder that's on the commercial side. Kind of like, what are the most common challenges that deep tech teams are facing in terms of commercialization, go-to-market, generating the first dollar?
I think the usual challenge is that first of all, maybe where should I start? First of all, I'd say that I mean, in Finland we actually have a pretty good system these days. They have this research business program, which basically is made to package research programs into startups. And government is basically financing if it kind of meets a certain threshold and there's a kind of a business opportunity there. Universities have these kind of entrepreneurs in residence programs, and government kind of finances, I don't know, 1 million, 2 million within the kind of a scope of university to think how this will become a business. And quite often in those cases, there actually is, the technical founders and a commercial founder. That's one of the requirements to kind of qualify on that program, that there is a commercial champion. And but still, I'd say that oftentimes the problem is that the founders don't sort of talk to customer early enough and get involved with the customer deeply enough. I mean, and quite often, particularly here in Finland, people are a little bit shy on what they have. If it's not perfect in every possible sense that they can think of, they tend to sort of think that, okay, it's not good enough yet. Even though personally, I think that earlier you start discussing with the customers, more likely earlier you get the kind of the first dollar in as well.
Agreed. It's kind of funny that you say this, because I think this is a common challenge regardless of what geography your company is or what industry you are. Like we regularly publish thought leadership on futureventures.ca that pertains to different topics. What is like organization development leadership, what is around customer discovery. The number one article that we have on our website is the forward deployed engineering model. It generates thousands of unique visits every month, and same thing goes with kind of like our thought leadership around customer discovery. And this is consistent with the advice that we give our founders and portfolio companies, like focus on understanding the problem intimately well. It's kind of interesting, the things that you had built, like you focused on the user experience, but user experience to you is like you putting yourself in the customer's shoes, kind of understand what it's like from their perspective. So even with your discussion,
but it's also the kind of a process that product is sold. So like really seeing it kind of a holistically. That's definitely a thing. Yeah, fully agree.
Out of curiosity, question, like how does Finland and the academic institutions deal with IP? If the company is born at university, does Finland or the university maintain some kind of rights over the IP?
So in Finland, and it varies a little bit between the different Nordic countries. In Finland, typically the university owns the IP. There are a couple of exceptions where it's the founder and kind of legislation guarantees that if you're an inventor, you get some kind of a compensation if it becomes commercially valuable. But the employer in general kind of owns the IP, and typically the IP gets transferred to the startup, and most of the time it is that it goes becomes as a part of the equity at the time of the founding or at the time of the first investment round. And typically the company then owns the entire IP, and university then has a small share of the shares, or university research institution has a small part of the shares.
I mean, this is a beautiful way to drive incubation and drive research and commercialization. Like, because different countries approach it differently, and Canada is experimenting a bit in terms of how we approach it. Now, is this the same model in the other Nordics or Nordic countries, or is this unique to Finland?
So in most Nordic and Baltic countries, this is the case, that the kind of market operates this way, that the IP gets transferred. I mean, there are a wide variety of, some universities, some countries. In some countries, the licensing agreements of some kind are more sort of a common than in others. But personally, I kind of prefer the full ownership of the IP in general, because if it's a license agreement, there is often kind of a challenge that relate to kind of how much the company can pivot from the original idea, and what happens if the company gets sold and so forth. So there are these question marks that are not always easy to tackle. And the other element kind of relates to the usually it's very uncertain how early companies can really start paying for the license fees. And as a VC, I'd kind of prefer to spend all of that money in the growth instead of buying royalties. And until the kind of business is really settled, it's hard to decide what is a kind of right model or right kind of a way of defining the royalties and all that stuff. So personally, I have preferred to own the IP. In Sweden is a notable exception, because there the inventor, and quite often in university cases, it's a professor and primarily the professor, and then some other science in the team on the IP. And that's a little bit of a problem, because professors often don't want to become entrepreneurs. And that often means that, but they still would like to kind of own a major part of the company. And it's kind of harder to make standards how IP gets transferred. Particularly, I have colleagues who look at the kind of Sweden or the Baltic countries, and they know those countries a little bit better. But if I look at kind of Finland, the fact that there starts to be market standards on how this is being done, what kind of a percentage we are doing, how the kind of evaluation of IP happens, all that stuff, it makes the life a lot easier.
Makes sense. Just to continue, I'm super curious about the Nordics, but like my perception based on kind of the research I've done is that the Nordics are punching above their weight in terms of startup. What are the Nordic countries doing right that other ecosystems that aren't? And what should North American founders learn from Nordic startup culture?
Hard to say. There are definitely pockets of a very, very, very good, high quality, startup ecosystem in North America. Silicon Valley, of course, is a kind of a particular example. But if we look at the Nordics, it's certainly true that per capita likelihood of a Nordic unicorn is like 7 times higher rest of Europe, and they generate like 17 times more value than rest of Europe. And even in absolute terms, this kind of a new Nordics area is like double the UK, and in terms of value generation, double the UK, and something like 9 times the Israel, which is not well known. And Nordics is kind of a little bit, not very well appreciated in this respect. But yeah, like very early on, things like MySQL, Linux, they come from Finland. Skype's, Spotify's, Bolts, and the rest. I think the secret actually is that we had to go abroad. We are relatively small and very open markets. Like there is, like Finland's 5 million people. What kind of a company you can make within a market of 5 million people? It's certain that not everybody will buy a supercomputer or, I don't know, what else, magnet levitating bearings. For turbo compressor. So we very early on had to go outside. And at the same time, because a small language group, everybody pretty much speaks okay English. So that's kind of an orientation type of a thing. But I think also we've always been this kind of a problem-oriented, particularly in Finland, that we like to solve problems. And we are very open to technology in general. That's probably the reason why we started the mobile phones a lot earlier than many others. And then there's a little bit of a luck as well, like if there is a big company like Nokia that makes a kind of world-class business, and then people. And it was a little bit two-edged sword. We had a startup ecosystem before Nokia started really, really growing and sucking everybody in. It was so large that it took kind of an outsized role in the market. And there was a kind of a period when not a whole lot of startups came out from Finland. But these days, again, when it's not as outsized, I mean, and of course it generated lots of wealth, and it was a pity that the fall. I'm not saying that, but in a way, also I think originally the Silicon Valley got started in a way that there were lots of people coming out of the military industry and then starting to figure out how to kind of start businesses, and a little bit like same type of a cycle. We had a downturn, and that forced us to start thinking this way. And so I think it's this kind of a mixture of different type of things.
No, makes sense. I mean, obviously the Silicon Valley, everybody's referring to the PayPal mafia and things like that. Is there similar term in Sweden, like for the Spotify mafia or for like Nokia mafia, like kind of like group of and I mean, I'm being facetious, but kind of like people that have been part of companies that have achieved like commercial success and then have exited this company, and so they started new companies.
Definitely there is this, and that's the kind of a thing that you need, like, I don't know, 15, 20, 30 years after first of those until that kind of knowledge and that kind of attitude has been diffused into the ecosystem. And so it's not like it usually doesn't happen very quickly. I think it was a similar process when kind of Israel got their sort of a startup ecosystem up and running. They started generating these funds, and and that kind of so you need to kind of do a very systemic, wide-ranging work on the ecosystem side. But I mean, I don't know Canada that well. I always assume that you are enjoying your American markets and American, sort of benefits of the ecosystem. The VCs are relatively close, whereas we always had a little bit of a lack of capital here.
Given the numbers that you shared with us, Juho, around the startups per capita, like the success that the Nordic countries are having, the export orientation that's kind of by necessity, do you see the opposite being true in terms of like external capital flowing into the Nordic countries? So, kind of like, if you look at your LP base, are they mostly Nordic LPs or are they from all over the world?
We have a few international LPs, but honestly speaking, most VC funds here, vast majority of money is coming from the kind of fellow Nordic sort of LPs. In terms of the direct investments into startups, particularly the larger rounds, it usually actually comes outside of the Nordics. And that's a little bit of a problem because there aren't really many, if any, these kind of full life cycle Silicon Valley style of funds that could kind of back a company, all the way to the sort of Series C or D. So in a way, we are still quite dependent on outside capital, particularly when it comes to this kind of later and bigger rounds.
Makes sense.
This Slush has made a big difference in terms of the visibility. These days, I think Slush is by far the best VC startup event in the world, and it's not just the kind of Europe or Finland, but in the world. There's no other event that would put together so many thousands of VCs in a same place looking at startups than this particular one. And I think it's great that it's actually a student run organization. So, non-profit student run organization. So they really could put a lot of effort and fresh thinking, how to make it better and, how to make it kind of really work for the audience.
Amazing. Would you be able to make introductions into the organization? I mean, would love to have him on the pod. It sounds like it's somebody that's really important for building out the ecosystem.
I mean, Slush, I don't know. I mean, I haven't looked at who, because the people change every year. I don't know who's today running it, but I'm sure that they are kind of rather easy to reach out. I can, of course, check, and
Sure.
probably the guy is someone I know. So.
You know.
Or have a kind of a direct connection. I mean, we are pretty diffused into the university ecosystem here, but if you're asking who's the guy to talk to, my name memory is like 2 bytes, but I cannot.
I know we're coming to time. Any parting thoughts, Juho? Anything that you want to share?
No, not really. It was a pleasure to talk. And actually, I noticed I have a meeting starting, pretty much like the coaching a startup to do their funding round. So that's
appreciate
it.
Well, it was a super fun conversation. I'm glad that you were able to join us on the podcast and share a bit of what's happening at Butterfly Ventures and a bit of what's happening in the Nordic countries. It was a pleasure.
Thanks. My pleasure as well. All the best, and hopefully we'll stay in touch.
For sure. Thanks.
Okay. Thanks. Bye.
Bye.